Hello, good morning, good afternoon, wherever it is you are from. Welcome to today's installment of the Ag Markets Blast with myself and the awesome Angie. Well, let's wait for her to join before I go any further. I'll tell you what, I can get the legals out of the way. So, nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trainers PIQ or PIQ Suite, or indeed its hosts slash affiliates, which obviously, as you know by now, is just myself and the awesome Angie Setzer. And I believe I've sent you the invite, my darling. So, have you received that? I think it's gone to you. One sec, let me just double check. Yeah, seems to be heading your way. Yep.
Bursts
Hello.
into the room like Kool-Aid Man. That's
Perfect,
start
perfect. Even I got
start the
that
morning.
reference. Even I got that reference. For those of you that aren't aware, so Angie and myself, well, mainly Angie, provide a rapid fire roundup of the latest pricing flows and market moving news in agricultural markets. Apologies if there are some children in the background. I've actually been sat on the roof of the hotel for all day on my own, and naturally, as soon as I come to do the show, a family have turned up. So apologies for that.
This is my favorite thing. Is it at least sunny now, or is it still raining
It's
where
really
you are?
sunny. No, it's really sunny. It's been an amazing day for me. Sat on the top of a rooftop in Malta, just overseeing like the old, the old town. Pretty much every building I'm looking at is probably at least 1,000 years older than the US.
That's
So
amazing.
there you go, bit of history for you.
Yeah, it's crazy to think about for me. I'm just like, wow, that building's 50 years old here. Like that's an old
And that's an old
building.
one.
But anyway, they didn't tune in to listen to us talk about buildings, residential or building construction. So let's talk about agriculture. Oh, you gotta do the legals. You gotta do the legals, right?
I've done them. I've done them.
Oh, well, look at us go. Cool. All right, then
Can't stop, won't
let's do
stop.
the
Crack
WASD
on,
wrap up then.
crack
Let's get
on.
rocking and rolling. I don't even know what I'm doing. All right. So yesterday's numbers, WASD numbers, we'll do a quick run through of those and kind of like what is coming next will be the highlight of today's conversation, I guess. So obviously yesterday's numbers, if you weren't paying attention or if you're just kind of tuning in to what the heck's going on in grains, we had corn carryout come in much lower than what traders were anticipating. For a lot of folks, they were kind of surprised by it. Traders weren't anticipating much of a huge increase in demand. We were talking, 32 million bushels more demand from last month was the expectation. The USDA said, yeah, that's cute. Actually, is closer to 200 million bushels of more demand, which to me was not surprising. I mean, as of last week, we were ahead of last year's export pace to start the year by over 300 million bushels. And the USDA was only anticipating a 32 million bushel year over year increase anyway. And I think their hand was forced. I mean, you can't ignore the size of the export book and the fact that the world supply of corn is a lot tighter than what it was last year at this time. And so you saw the USDA come in and raise that demand via exports and raise demand for ethanol. We've also seen record ethanol exports that have helped to support margins. We've gotten an increase in ethanol demand here in the US in general. We're seeing more ethanol used in gasoline. And then, of course, I mentioned the export numbers have been record large. And so that's helped to support margins well. Ethanol usage was bumped up 50 million bushels. I would argue that one was a little bit like I could go with the corn bears and be like, that's aggressive. And yeah, I would say the ethanol adjustment this early is potentially aggressive, but the export one, in my opinion, wasn't at all. So long story short, we came in at a carryout of 1.738 billion bushels, so down 200 million from last. Paper is not a number that you can say is tight stocks number, but from a stocks to use ratio, with the fact that we're seeing such a huge increase in demand overall and all of these other things that we have going on, it is something that, with yesterday's figure, you could argue that our old resistance is now probably support as we move ahead. And so that's positive for corn. On the wheat side of things, the numbers came in a little bit lower than what traders were anticipating. We saw some bumps in demand for wheat that surprised some folks, a little bit of an increase in export figures there as well. Our export book, similar to corn, is ahead of last year, though not quite to the pace that we've seen in the corn side of things. And so the USDA wasn't wrong in making that little bit of adjustment, but it really wasn't a needle mover. Like, it's not one of those things where you're like, oh my God, 20 million bushels is going to make the difference. But it, is something that shows that we do have reasonably decent demand also for US wheat compared to what we've seen here the last couple of years. And that's something that is solid, or at least somewhat surprising considering the strength that everyone wants to talk about in the dollar. On the soybean side, not really much in the way of super surprises by any means. USDA left carryout unchanged. They did do some magical math with soybean oil. So one of the things I've been talking about, one of the things a lot of people have been talking about, is the soybean oil export book and how large it is. You know, we basically had doubled the USDA expectations the first couple months of the marketing year. So the USDA did come in and bump up soybean oil export projections. But what was interesting in that is they kind of, like I said, used magical math to get there, in the sense that they bumped up extraction rates and lowered domestic use for feed or other things, food or feed, which was interesting in and of itself as well. Global numbers on soybeans and wheat weren't really anything too shocking either. On corn, they came in lower than expected, though that was a lot to do with the US numbers and things like that. I'll stop here and see if you have anything to ask before I move to what's next.
Well, I'm guessing you're going to be coming on to this, because obviously yesterday, and I apologise that I haven't had a chance to look today. I've been kind of in funding round held this morning with admin and stuff. But we spoke yesterday about we were looking for the Chinese numbers and some Chinese headlines overnight. I'm guessing that might be a point that you're bringing up anyway. Hello, hello, you're muted. Hello,
Sounds.
and sorry, can you hear me? You're muted again. Oh, looks like we might have lost Angie. Unfortunately, I can't cover because I know nothing, and this is the Angie show. So let's see if she rejoins. Dum dum dum. I'll try and. I can tell some jokes, but I don't think they'll be appreciated on here. Let me just see if I can grab. There she is. Right, requested. Request. Accept. Hello. You can speak. You
My
can
gosh, my
speak.
internet was just like, no, you can't answer that question. So could you give me the question again? Yeah,
Sorry.
sorry about that.
Yes, sorry. So no, that's right. So the question, well, normally it's me, so I'm glad, I'm glad for once it's you. No, the question was, I guess you were going to probably come on to it anyway, but obviously yesterday we were chatting about the Chinese numbers that from what we're going to hear from that side, but also any Chinese headlines. And again, unfortunately, I I haven't been able to check the headlines this morning due to other admin issues with the funding
Oh
round
yeah.
and all stuff like that. The PIQ are doing
Yeah,
so.
no,
So
we're
yeah, what can you tell us about
it
that?
doesn't seem like we're missing much right now. The Chinese headlines. I think overnight Reuters came out with their my favorite Reuters articles. You know, relying on sources that want to remain nameless or whatever. But they're in the know, so you've got to trust who they are. Came out and said that they want to weaken Chinese currency, or that's the talk from the officials, that they could be looking to weaken Chinese currency as we move ahead. I think that's the biggest announcement out of today. We didn't really get much that I've seen from the first initial day of the conference that we should be expecting. And so, from an overall standpoint, the only thing from a Chinese number side of thing that we did get outside of the economic stimulus news was the USDA did reduce corn imports for China, which isn't surprising. And they actually brought it down to a number that's probably more in line with what we'll end up seeing. And so that'll be something that we'll watch. And that leads me to kind of like, what next, right? In the sense of like, we get these December numbers out, they gave us a little bit more in the tighter, a tighter sort of pipeline scenario for corn.
So just on
Yeah.
this then, because obviously we mentioned yesterday that obviously to begin the week there was a lot of Chinese rhetoric about all this stimulus that's coming. All that we'll hear more over the next Thursday, Wednesday, Thursday from this Chinese
Hmm.
conference. Bearing in mind we've had nothing. But when it comes to physical numbers, in terms of stimulatory measures, we see very little. So
Hmm.
I guess if we don't hear much again tomorrow, then the ask could fall out of all the Chinese risk assets, including potentially any bids that we've seen in the ags markets on the back of this perceived incoming
Yeah.
Chinese dialogue.
I would say I don't really know if we've seen much in the way of ag markets get any sort of stimulus from the Chinese stimulus talk. Though, I mean, soybeans, I think, may have some support on the idea that Chinese demand could be better if we were to see consumer stimulus. But I feel like from an overall standpoint in the ag sector at least, our overall sentiment is so darn negative about what Chinese demand is going to look like under the Trump administration, that they're already kind of factoring in a drop in exports, whether you see stimulus or not. And maybe I'm wrong in
So you
that, but
could
I feel like we're so negatively bent in grains anyway. Like it's almost like we're
you could argue that grains markets are kind of like the wisest markets in regards to the Chinese BS that
I
we keep seeing, because obviously equities love a
oh
rally on any
100%.
Chinese. Oh, we might do some
Like
stimulus. Whereas grains are like the physical guys like you guys are like, well, we've seen this a million times before. This we'll wait until something actually
that's
comes
what it
through.
is. And I mean, you made the most important point. It's the physical side. So that's why grains can be conservative. That's why, you can see other, harder assets be conservative in the sense that like the cash is king. So grain flow is king. Like how grain ends up flowing, whether grain ends up moving in the end or not, is the most important thing. And so like we can get excited on the idea of stimulus, but from a pure economic standpoint, like in soybeans especially, Brazil's still going to eat our lunch, April forward when it comes to getting Chinese demand, simply because they have the cheaper supply available, at least, at this point in
Right.
time.
Yeah. Yeah. Yeah.
And so that'll be something that we're watching. The biggest thing that on the soybean side, the Chinese, like everyone wants to tie soybeans very closely to China, and it makes sense. They are a large buyer, although we have seen our market, where we're sending soybeans change pretty dramatically in the sense that we're sending beans to other countries. Our exports to other countries are much higher than what they were a year ago, whereas Chinese exports really are kind of continuing to drag. And so China is always tied really closely to the soybean market. But what I'm watching mostly now is Chinese corn demand. I've heard from more than one, reliable source who puts out information into the market structure that China has some quality issues, some pretty major quality issues. And we're also hearing about some pretty major quality issues in the European Union. And so one of the things that I keep saying, and this will kind of be the point that I leave with today, one of the things I keep saying is a lot of folks want to focus on what the USDA says in their balance sheets, and that's great. It's a great forecasting tool as we work our way through a growing season and get to harvest. Once we hit harvest, it's backwards. You can't use that as a hey, the USDA says this, so this is what we have. And so that's one of the things watching the quality issues that we're seeing in the EU and China, especially. We could see a continuation of super strong corn exports, even if folks don't necessarily think it has to happen because of the balance sheet, because of what we're seeing in cash. And so that'll be the thing that we're watching now is more than the rhetoric that you're talking about. Like China's rhetoric will be great, but do they actually end up buying physical bushels? And that's really the biggest thing that we're going to be watching now as we go forward.
Absolutely fantastic. And I'm guessing, is that our third point? Well, I think we've done a kind of a hybrid of
We've
kind of
covered too
multiple
many
points there,
points at
haven't we?
this point because we're way
Perfect.
over.
Yeah, but we'll allow it. We'll allow it. It's all quality content. Angie, as always, thank you so much for taking the time to do these updates with us on a daily basis. Listeners, thank you so much for tuning in. If you are a farmer, thank you so much for your hard work. I don't think you get as much appreciation outside of your industry as you deserve. So please, please, please look after yourself and keep doing God's work. And we will see you tomorrow.
I'm excited. I'll be here.
See
Have
you
a good
later.
one.
Thank God for that. See you later. Goodbye.